Hi everyone, welcome back into another video. And in today's video, I'm going to actually just focus on explaining to you on how we can clearly understand the directional bias, okay, on the higher time frame. So a lot of people actually seeing a lot of good setups on the lower time frame, or what you call the execution time frames, but they end up actually in a loss or stop hunted by the market. But if they look on the setup, it's a very, very good A+ setup. But they end up just blowing their accounts. They end up just in a drawdowns, okay, losing their funded accounts or blowing their accounts in other failures. Okay. And the only reason is because we are failing to analyze the higher time frame. And when looking for a setup in the market, the most important thing for you is to understand the higher time frame. So the higher time frame is what we call what you can call our map. Okay, that's our map. It's going to give us the direction of where we are going to go, or where we are going to reverse, and where we are going to react from, which way we are going. So you need the higher time frame as your map in order to know where you're going. Okay, so a lot of people are making mistakes in understanding or in knowing which direction bias is. Are we going to be on a particular day or on a particular week? Okay, so you need the higher time frame to know how to execute on the lower time frame. Okay, if you do not have the higher time frame as your backup, then you're going to actually, most of the time, you're going to lose. Okay, it is not going to be safe for you if you're just trading on the lower time frame without understanding the higher time frame. So this is an advice to you guys. Make sure you actually understand on how to analyze the higher time frame, because sometimes people don't even know how to analyze the higher time frame. Like, they analyze the higher time frame the same way they analyze on the lower time frame, like waiting for maybe a particular break of structure, waiting for a retracement, waiting for a formation of a particular order block, or other people call area of liquidity. That's going to take a lot of time, and it's going to make you just waste your time on the chart, and you're going to actually wait for a long time and end up just losing, because you don't know how to analyze the higher time frame. The way we analyze the higher time frame is different from the way we analyze the lower time frame. Okay, here on the higher time frame, we don't consider the issue of market structures. We consider the issue of candles, and that's why I want to tell you on how we can use the CRT model. Okay, the candles are ranges theory. Okay, like we treat every candle as a range. Okay, because this is a higher time frame. So a particular single candle represents a massive movement on the lower time frames. That's why we say we are just going to focus on the candles. Like, candles are ranges, okay? And that's it is the simple explanation about the CRT model, okay? Don't overcomplicate it. It's just that we focus on understanding candles, like we treat them as ranges, and also we also use the concept of turtle soup to give us the directional bias. And also, you must also use the concept of fair value gap to give you more confirmation of a certain directional bias or a certain reversal. Okay. So here I just want to show you on how we can use the CRT model, the candles ranges theory, simply to understand the directional bias. Okay. Because it's important to know the directional bias. It's very important. If you do a mistake in knowing the direction bias, it means you're going to end up losing. Okay. So let us start. Okay. Let's start on how we can do analysis on the higher time frame. Okay. And this is the daily time frame. Okay. Let me show you how and how much you can see the turtle soup or the candles ranges theory working on the daily time frame. Okay. Because a lot of people are actually arguing about this concept, trying to say, oh, it's not easy. How can you just use candles? Guys, it's a very, very good system of doing analysis using the CRT model or the treating each candle as a range. It's going to help you. Okay, even this one. Okay, this one is the turtle soup there. Okay, and most of the time, in order to validate that turtle soup as a sign of reversal, okay, if you want to verify that turtle soup or that candle range theory, if you want to understand about the turtle soup here, okay, and the way we are going to confirm this as a sign of a reversal, most of the time you will find the left of the how it will be an order block or a fair value gap. You look on the left, bearish order block here. Okay, this is the support that bearish candle there as that bearish order block as my supporting PDRA here. Okay, and that's what I was saying. Like there's always a supporting PDRA when we find turtle soup is a reversal, and you can target this. Okay, so now you have a directional bias on that particular day. You know you're going to be bearish, and you can see how price went down. That's how we can use a liquidity sweep or turtle soup in understanding direction bias even here. Okay, you have this turtle soup. You have this simple turtle soup. Okay, at this right. You have this turtle soup there. Okay, turtle soup supported by what? Yeah, that's turtle soup. Been supported by that internal range liquidity. So now you know we're going to be bullish. Okay, targeting this high, or we can target that's just a very nice ride on this bullish movement. Okay, another example is here, another turtle soup here, right? You can see previous candle targeting, you can target this. You can easily target this if you just want to trade from the internal range liquidity there as your target. Okay, and you can see how price went up to get this high. You can even target this. Okay, this one. So target. Okay, you can see how the market went. This, or you can just look at this here, this area again here. We had turtle soup there. Okay, price swept that previous candle high. There, you can see, right? You can see even there. We swept that so that you guys only see them easily. You can see in this way. Okay, let me just keep on removing this. And this turtle soup is being supported by this bearish order block. See how beautiful it is. Now you can expect continuation of the movement, and that's why we had those bearishness there. Okay, you can see we had that bearishness there. That's what was because of this reaction. Okay, simple fair value gap here as your area of liquidity, as your internal range liquidity appear, and you can expect continuation of that movement to go down, and you can target even this area here. Okay, internal range is this external range liquidity into this internal range liquidity here. Okay, I've created a video about internal range liquidity and the external range liquidity. You can go and watch it, and you understand how easy it is to know this directional biases. So you can see we simply use candle highs and the fair value gaps bias. Okay, so you can see price, even when price was trying to reverse here, we had this sort of turtle soup inside this fair value here, but it was confirmed more after that. Okay, you see this turtle soup, and the market printed this bullish candle, or you can target this high. Okay, and the market went, and you can see how the market acted there. Okay, we had that movement. Okay, tap this, we were left with this internal liquidity. We have this internal range liquidity right there, this one here. Okay, so the way we can expect it, so you can see what happened there. Let's see, you can see price tapped into this fair value gap here, and this was a turtle soup here. Okay, that's a concept of candle range theory, or sometimes we just say internal range liquidity and external range liquidity. The same way with this area here, okay, this turtle soup here. You can see we have this turtle soup, expecting price to go lower, some range liquidity there. Okay, that's how it is easy. So why do we actually expect to see reversal here? Because we have to remember that concept. Like there is always a supporting PDRA when we have a turtle soup. Like the way we had this supporting, we had a particular supporting fair value gaps, supporting fair value or supporting PDRA turtle soup. Okay, or from that candles high sweep, or that look at this. Do we have any supporting PDRA here? Okay, we have this. This is the supporting PDRA to actually you can expect a true reversal from there. Okay, this you can see tap, you can see how we tap into this. See a continuation of these cells. Okay, and that's how beautiful it is. Okay, let's look on the even here. Here we have this turtle soup, although it is not that high probability because you need experience to know this. Okay, but this voted by this order block. Simple. Okay, very long. As you see this week, have any supporting PDRA here? So looking at this, you can find again this type of soup. Do we have any supporting PDRA? Yes, we have the supporting PDRA from this region. Supporting PDRA acting as a resistance PDRA, as I say. Okay, now that's another example for you to actually know the direction. But you can see this. So we are targeting any fair value gap. It can be this. It can be this fair value gap here. Okay. You have several PDRAs. Point of actually target for that particular analysis, because this is daytime. Okay, you can expect bullishness up to that level, and then I believe you find a lot of bunch of opportunities from these areas here. Okay, so guys, here I'm just focusing on buyers. Okay, using the issue of candles. Okay, just candles. Okay, and the issue of total soup and the issue of fair value gaps. Okay, so we are just focused on the external liquidity and internal liquidity. Internal liquidity is when we tap into fair value gap. Okay, so there are that order block. Okay, beautiful order block which has an imbalance there. So nice one. Targeting this. That's easy. How easy it is. Okay, the same way with total soup there. We are still in this resistance point crisis. As simple as that. Okay, that's how simple and how easy it is to understand the direction of bias. So there are a bunch of other examples. Another one is this total soup here. Okay, in the reversal. Another one is this one. This total soup. Same way. This total soup. So stop wasting time trying to look for order blocks and use candles on the higher time frame like this. Easily, it's going to give you more trades, and you're going to trade more safely than just waste time waiting for. Okay, look on this. These are all turtle soups, and they are all being supported by particular PDRAs. On the left, you will find a particular PDRA supporting those turtle soup and giving this a turtle soup here. We have the supporting PDRA here. Okay, simple. We have this turtle soup here again. We have this. It's like a bearish order block here. Okay, a resistance point supporting that reversals. Turtle soup here supported by this bullish order block here. Okay, this bullish order block is supporting this supported by this area here, the resistance point. Okay, some form of a bullish order block here is here. That although it is a very big side, but this supported by this bearish order block here, a very good resistance point. Okay, the same way with this turtle soup here, supported by. See how it is. Okay, now you have this direction. You can see how price is dropping. The same, you always find the supporting PDRA. You see, supporting PDRA is here. This you can just use. You see this supporting PDRA. Same way with this. You can see all these colors here. Try to look careful. You can just stop this video lines with yellow triangles, yellow shaded areas. These are turtle soups. Expect that it's always a supporting PDRA. Most of it is a bullish order block or a bearish order block. Most of the time it will be an order block, but it can be also an internal liquidity with it, which is the fair value gap. Here you have this order block, right? As a supporting PDRA. This bearish order block, right? That's going to give you confirmation, like we are going to go on. You are going from this turtle soup. You have this supporting. And always, you just need to anticipate the next candle. Where is the next candle likely to go? If it's going to be bullish or bearish, and that's why you just target on understanding the next candle is going to be printed where. Like here, we have expected some bullishness. You have this form of a bearish candle, but this is just a highs here, and the market keep on going higher. The same way with this turtle soup. Same with this turtle soup here, supported by what? Turtle soup expecting continuation to the upside. A lot of things to support you. Particular zone, particular turtle soup. Just find a supporting PDRA for you to have that confirmation experience. You don't need to find the supporting PDRA all the time. You just find, but most of the time, look on the left here. You find this bullish order block, this bearish order block, this bearish order block is bearish order block. I think you can see this bearish order block. It's right here. This bearish order block is the supporting PDRA for this turtle soup. Okay, this bearish order block also. Okay. You see those supporting PDRAs, they give you more confidence, like Max going to be very easy, very nice. Okay, look at this. All of these turtle soups, these turtle soups are going at just how easy it is to treat each candle as a range. Okay, candle range theory. Okay, so another turtle soup down here, supported by this resistance point here with this bearish order block there. Okay, bearish order block. This turtle soup, in particular resistance point. This. So that's how it is nice and easy to use the CRT mode and more confirmations. Same way with this status SOPIA. This status SOPIA was supported by this fair value gap. There is always a support in PDRA. Okay. So guys, and that's how it is easy to know direction bias. Easy, easy like that. So don't waste time trying to read the whole market. Okay. Just focus on understanding, treating each candle as a range, understand about the internal range liquidity and the external range liquidity concept, master this concept of turtle swoops and how we can find the support in PDRA to give that confirmation of a certain direction of the market. Okay, because turtle swoops indicate a reversal. So in order for you to confirm that reversal, you look for a support in PDRA. Most of the time it is an order block, but sometimes it is a fair value gap, which is an internal range liquidity. Okay. So just use that simple concept and you're going to actually be highly profitable. I believe seeing these examples, and this is just a single pair. This is just Aussie dollar, okay? There are a bunch of other currencies. This is how you're going to actually simplify trading. You don't need to complicate trading. This is how simple it is in order to understand the direction bias. Just draw this, which is the fair value gap, and you now know the direction. The only thing that remains is to go on the long time frame, look for an entry, and you're done. Like here, just go to the long. You don't need a bunch of concepts in order to understand directional bias. You don't need to wait for the market to create a retracement into a certain order block. No, you just need this simple tools, simple concept, which is status SOP. Okay, internal range liquidity and the external range liquidity is enough to give you or to make you bias, because directional bias is very important. You do the mistake in understanding directional bias, it means you're going to execute on the so you need to know the direction of bias in order to know the trend, the overall trend. And when you know the overall trend, it's easy for you to execute on the lower time. Execution on the lower time frame is very easy when you know the direction of the higher time frame. Okay, to know, find setups on the lower time frame. Okay, so just that's what I wanted to share with you guys. So if you want to see on how we can execute on the lower time frame, there is a video that I actually explained about how we can look for entries from these status SOPs. It can be an ICT unicorn model, it can be an order block, it can be fair value gap. Just look for a very good entry point and then execute. The most important thing is to know the direction bias, and that's why I created this video for you guys. Thank you for your time, guys. Try to go and back test this, and you can go on the lower time frame and see how it works. Okay. Thank you for your time. Have a nice day. Don't forget to subscribe. Don't forget to like this video. Don't forget to comment. Okay. Thank you for your time.